Hello, I'm Manoush Samarodi reporting for World Risk and Insurance News. In this edition, we bring you international headline news affecting the insurance industry. We welcome back the Insurance Insider and its report on reinsurance renewals. Nathan King is at the NASDAQ market site in New York for a RIN TV financial report on insurance stocks in 2011. He takes a closer look at performance in the various sectors of the industry. And in the latest contribution from AM Best, Best Day on RIN TV looks at the 25 largest insurers by assets and by net premiums written. This and more from the online video news network for the global insurance community. You're watching World Risk and Insurance News.
From our news bureaus around the globe, this is World Risk and Insurance News.
We begin with international headline news affecting the insurance industry. According to Zhang Junbo, chairman of the China Insurance Regulatory Commission, China insurers wrote 1.43 trillion yuan in premiums in 2011, a 10.4% increase over the previous year. The P&C sector alone had an 18.5% increase, with life insurers posting a 6.8% increase. The chairman said competitiveness in the industry is relatively weak, and he's concerned some insurers may have violated industry regulations in order to gain market share. In Washington, the Obama administration is before the U.S. Supreme Court defending its new health care law against charges that the individual mandate to buy coverage is unconstitutional. Meanwhile, Bloomberg reports health insurers have contributed some $86 million to the U.S. Chamber of Commerce to oppose the law. A spokesman for America's health insurance plans, the industry's lobbyist, says concerns remain regarding whether health care reform provisions will raise costs and disrupt coverage. We'll be watching this story closely as it unfolds. In other news, the latest CBI PwC Financial Services survey says that the UK financial services sector finished 2011 quite strongly. Here with some thoughts on that is Ian McCafferty, chief economist for CBI, a UK business lobbying organization.
No, I think the recovery is continuing, but it's clear that the pace of growth has slowed and is expected to slow over the course of the coming 3 months as well. It's causing a slight turn in employment prospects. We've been seeing employment building up, but that's likely to fall back very slightly over the next quarter. But probably the most striking result in the survey is, of course, the loss of confidence. We've seen confidence fall back for the first time since March 2009, and that's, I think, a reflection of the degree of uncertainty and volatility that we're currently experiencing in financial markets.
The CBI PwC report went on to say that the life insurance sector grew, though slowly. General insurers saw marginal growth in income and volumes, but expect improvements in coming quarters. Insurance broker profitability decreased after an unexpected fall in volume and income. Though operating costs were lower, average cost per transaction was up, and profitability is expected to continue to fall in 2012. January 1st is one of the most important dates on the annual reinsurance calendar, as many contracts come up for renewal at the start of each year. Following record catastrophe losses and global economic turbulence in 2011, many speculated on what would happen to rates at the start of this year. Here with a report on reinsurance renewals is Rebecca Bohl, publishing editor for the Insurance Insider in London.
All three major reinsurance brokers have now given their accounts of the renewal season, with some degree of consensus, at least on capitalisation levels, and some differentiation, notably on rates. On market capital, Guy Carpenter confirmed that the widely held view that the 100 billion plus of insured losses had not decisively impacted reinsurers' capital by year end. The firm said that the capital would finish the year in the range of where it began. Willis Re began the 1st of January reporting season saying that despite its hefty cat bill, 2011 losses were still likely to be an earnings event rather than a capital one for the sector, with third quarter capitalisation only marginally down from the start of the year. Aon Benfield agreed, saying that reinsurer capital had fallen by 4% in the first 3 quarters of 2011, from $470 billion to $450 billion. So what of rates? The headline increase in Guy Carpenter's global property cat rate online index was positive 9.5%. US property cat was up 8%, Guy Carpenter said, while Willis Re noted that loss-free US nationwide programs renewed up between 2.5 and 10%. The key story in the US was Chartis, which chose to drop around $1.2 billion of traditional limit from the top of its colossal global program. In doing so, Chartis got its program home at a lower money cost than last year, with the program roughly flat on a risk-adjusted basis. This, added to Liberty Mutual also dropping $400 million of cover, released significant reinsurance capacity for national US placements. Thus, nationwide programs renewed around 10% up, when our sources suggest that if buying demand were higher, rates would have increased more. The UK and European renewals were described as very disappointing, given worldwide losses and model change. France and Germany were thought to have been the biggest disappointments, with Allianz's sizable cat programme renewing without a rate change. Both regions' renewals were fully placed by mid-December, with ample capacity. European rates increased on average 2.5%, and the UK renewed flat, according to Guy Carpenter. Willis Re noted that cat loss-free European accounts renewed up 1 to 4%.
Thank you, Rebecca. For more on reinsurance renewals from the Insurance Insider, go to the RIN TV On Demand library. Now, continuing our look at stock market performance in 2011, we turn to Nathan King, who joins us from the NASDAQ market site in Times Square with a RIN TV financial report on year-end results within the global insurance industry. So, Nathan, how did the industry fare in 2011?
Yes, well, Manoush, 2011 was an eventful and daunting year, of course, for the capital markets in general. And it was no difference for the insurance sector. Overall, insurance stock performance in 2011 was quite volatile, as seen here on the NASDAQ Insurance and AM Best Global Insurance Indices. Looks a bit like a topographic map of the Tour de France, doesn't it? With steep hills and deep valleys. It's worth remembering that insurance companies are not just valued on their core businesses, but also on their investment acumen. And declining business activity coupled with weaker equity markets had a substantial impact on sector stocks throughout 2011. Particularly striking with the European insurance stocks in the latter part of the year. European insurance equities declined some 17.6%, more than 2.3 times the general US market. European insurers were actually well ahead of the market in May with a 24% return. But by late September, however, Europe and insurance shares tumbled to minus 24% for the year, a direct result of the European and sovereign debt crisis. News was even worse, unfortunately, in the Asia-Pacific region, where insurance indices were down over 24% as local and economic conditions and unprecedented cat losses like in Thailand were compounded by gloomy economic news from the US and Europe. Despite all the negativity, though, the US insurance sector ended 2011 essentially unchanged, much like much of the broader stock market here. As we move through 2012 and economic activity begins to improve, so too should the demand for insurance. Interest rates, remember, remain fairly low, and the fragility of the global financial system does not suggest tightening from central banks. This should add some measure of stability. In addition, there are signs that the US economy is improving, which may provide some reassurance in other parts of the globe. Still, many of the challenges of 2011 continue into 2012, including the vagaries of local and regional economies. The key variable for insurers and reinsurers in 2012, price. But with excess capacity in the market and stiff competition, that's not your typical recipe for a harder market. In our next report, we'll look at the performance of specific sectors of the market, including P&C, A&H, and brokers. Back to you, Manoush.
Thank you, Nathan. And now we're pleased to have another contribution from the AM Best Company. In this edition of Best Day on RIN TV, AM Best reviews its rankings of the top 25 insurers by assets and by net premiums written. Here are highlights from this report.
AM Best has compiled two rankings of the world's 25 largest insurers. One is by assets and the other by net premiums written.
Although its assets slipped to $1.09 trillion, a 5% drop from 2009, Japan Post still kept its top spot. The only other Asia-Pacific insurer to make the top 10 on the assets list was Nippon Life Insurance Company of Japan, which rose to 9th place from last year's 10th place ranking.
Life Insurance Corporation of India also made a nice jump to number 17 on the list, up 3 spots from the year before.
MetLife moved up 3 spots from last year's number 7 ranking with a healthy 25% increase, while AIG moved down 2 places on the rankings to number 5. Now by premiums, AIG has plummeted from the 6th largest insurer to the 13th, with premiums of $46.2 billion.
It was a good year for health insurers' premiums. United Health Group was the only U.S. insurer to rank among the top 5 with $85 billion in premiums written. Last year, United Health was number 5 on the list. This year, it's number 3.
Another U.S.-based insurer that made a significant move on the ranking was Berkshire Hathaway, which cracked the top 25 in 2010. Previously ranked at number 26, the Warren Buffett-led group came in at number 24 with premiums of $30.9 billion.
AM Best places France's AXA and Italy's Generali in 1st and 2nd place, respectively. It's interesting to note that both companies held the same rankings last year. Also making the top 5 was Germany's Allianz at number 4. Munich Re was 7th on the list, and the United Kingdom's Aviva plc placed 9th.
Well, that's our report. I'm Manoush Samarodi in New York. Join us next time for more world risk and insurance news on RIN TV.